Welcome back, everyone, to the deep dive. Today, we are diving into the world of stablecoins.
Stablecoins. Yeah, it's crypto, but maybe a little less wild than what you're used to.
A little less of a roller coaster.
Yeah.
Definitely less chance of ending up as someone's crypto horror story, which we know is a popular hashtag these days. But really, stablecoins, why they're making waves, and why everyone from, your most hardcore crypto friends to folks just starting to think about this stuff should be paying attention.
And it's true that volatility, it's what keeps a lot of people away from crypto, even if they're curious.
Totally. Who wants to watch their money do the Macarena when they're trying to just, like, buy a cup of coffee or something?
Exactly. So stablecoins, think of it like the security and flexibility of cryptocurrency, but with the stability of, say, the US dollar.
Gotcha. So instead of freaking out every time the market sneezes, stablecoins give you a way to ride the crypto wave without the constant fear of, like, a wipeout.
Exactly. They're pegged to a more stable asset like the US dollar, a digital anchor, you could say.
I like that. A digital anchor. Makes sense. This one Twitter thread I saw by, let me see. Yes. Imrulo.eth. They called stablecoins a digital piggy bank. Kind of cute, right? But how do they actually work? What's the magic behind that stability?
Well, there's a few different approaches, each with its own, let's say, recipe. One of the most common, it's fiat-backed stablecoins. They're backed by actual reserves of, traditional currency held usually by some kind of financial institution.
Okay, so there's like actual real-world money sitting in a vault somewhere backing up every digital token.
Right. Think Tether, US dollar coin, those are some big ones. That one-to-one backing is what gives them that stability.
Got it. Got it. That makes sense. But what about crypto-backed stablecoins? I mean, this seems kind of, well, counterintuitive. Isn't crypto supposed to be the volatile one?
Right. So instead of relying on fiat currencies, these stablecoins are backed by, you guessed it, other cryptocurrencies. But here's the catch. They use something called over-collateralization.
Over-collateralization. Okay, you're
That's
using
all.
the big words now. Explain it like I'm like 5, maybe?
Okay, so it basically means that for every stablecoin they issue, it's backed by a larger amount of cryptocurrency. Think of it like a buffer. If the price of that backing cryptocurrency drops, you've still got enough to cover the value of the stablecoin.
A safety net, kind of.
Exactly, a safety net. DAI is a good example of a crypto-backed stablecoin. It's linked to the US dollar, but it's actually backed by a whole bunch of different cryptocurrencies, like Ethereum, for one.
Okay, so it's like having a treasure chest full of valuables backing up your digital cash. I'm starting to see how this stability thing works.
And then we have the even more, how do I say this, adventurous approach, algorithmic stablecoins, sometimes called non-collateralized stablecoins.
Algorithmic stablecoins. Sounds complicated.
Well, imagine a system that's always adjusting, behind the scenes to keep the stablecoin's price, well, stable. If the price drops too low, the system automatically reduces how many stablecoins are out there to increase the value. And if it goes too high, it increases the supply to bring it back down.
A self-balancing system. It's pretty cool.
Right. FRAX, that's a good example of an algorithmic stablecoin doing its thing.
Wow. Okay, that's fascinating. And then we've got, let's see, the commodity-backed stablecoins, right?
Mm-hmm.
These seem like the simplest ones to understand. They're backed by something tangible, gold, or...
Right, real world assets. It's like holding a piece of, well, in the case of gold, a piece of gold, but digitally. PayX Gold, for example. Each token is backed by a real physical ounce of gold sitting in a vault somewhere.
So it's like you're bullish on gold, but you don't want to have to, like, buy a safe and hire a security guard and all that.
Exactly, a digital bridge to traditional assets. Now that we've talked about how they work, let's get into why any of this matters. Why are stablecoins something you should even care about?
Right, the million-dollar question, or should I say the million stablecoin question.
Because I think they have the potential to really change how we use and think about money every day. A more stable, more accessible way to join the digital economy.
Okay, that has potential. Let's break that down a bit.
I think one of the biggest things is they're reliable, right? Like even when the rest of the crypto world is, having a meltdown, your stablecoins are stable.
Yeah, that's going to be huge for investors, especially those who are like, crypto seems kind of cool, but also terrifying. It's like the security of traditional finance, but with, the potential upside of crypto. Best of both worlds.
Right, and it's bigger than just, someone's portfolio. Think about businesses, right? Especially those working across borders. Stablecoins could really change the game for international payments.
Oh, yeah. Faster, cheaper.
Exactly. No more waiting for days for things to clear, no more crazy exchange rates.
Yeah, no one needs that extra stress in their lives. But you know what else strikes me? You mentioned financial inclusion earlier. This feels like it could be a game changer for people who don't even have access to traditional banking.
Absolutely. People in parts of the world where, frankly, traditional banking just doesn't reach. Stablecoins could be that lifeline.
It's almost like democratizing finance, making it so anyone, anywhere can participate in the global economy. Okay, that's a powerful idea.
It is. And as we dig deeper into this, it becomes pretty clear that stablecoins are more than just a new kind of money, you know?
Uh-huh.
They're like building blocks for a whole new financial system.
Okay, I'm intrigued, but
Mm.
you say new financial system, and I immediately think, okay, but what could go wrong? What are the risks here?
Well, for one thing, regulation. The whole point of cryptocurrency a lot of the time is that it's decentralized, right? So how do governments regulate that? It's a tricky one. We're seeing it play out right now.
Yeah, that's a tough balance. Encouraging innovation, but also protecting people. And the whole system, really.
Right. And of course, there's security, which is always a concern with anything digital. Stablecoins could be targets for hackers,
The
stammers.
usual suspect.
Exactly.
Yeah.
So security for the platforms, educating users,
Mhm.
all that's crucial.
Well, this is the internet in general, right? Got to be aware, got to protect yourself.
Yeah.
But honestly, even with the challenges, the potential benefits are huge.
Yeah.
I mean, think about a domain like stablecoins.finance. If you're trying to navigate this whole new world, that could be a game changer.
Oh, sneaky. You found a way to bring it back around. But you know what? You're right. Having a central hub for info, services, discussion, all of it, that would be so valuable in this space.
Right. Investors, businesses, developers, even policymakers all in one place, learning from each other, figuring this out together.
It could be the place to go to understand stablecoins.
Right. And for financial institutions that want to get involved in this space, owning a domain like that, it's a statement.
It says, we are here. We are stablecoin experts.
We're taking this seriously.
We are the future of finance. Bold move. It's kind of mind-blowing when you think about it. We've talked about like individual people using stablecoins, businesses, but this could really impact the whole financial system, couldn't it? Oh, absolutely. This is way bigger than just a new type of currency. It's about rethinking the whole thing, really. What if cross-border payments were as easy as, sending a text? What if where you lived didn't determine whether you could even access financial services?
That's a world I want to live in.
Right. And imagine the innovation. We're already seeing new financial products and services popping up, especially in DeFi, decentralized finance. And this is just the beginning.
It's exciting, but it also feels like we need to be, I don't know, careful, thoughtful about how this all develops.
100%. Security, transparency, ethics. All that's got to be front and center. We can't let stablecoins become a way to just like repeat the mistakes of the traditional system. And that's actually why I think something like stablecoins.finance is so important.
There it is.
It's a chance to get it right. A platform, not just for, the technical stuff, but for these bigger conversations. The ethical side, regulation, best practices.
Everyone at the table, from the
Yeah.
people building this stuff to the people using it every day.
Exactly. Less hype, more real talk about the impact this tech is going to have, because it's going to have a big one.
No doubt. Well, as we wrap up our stablecoin deep dive, I'm feeling cautiously optimistic, maybe. Challenges for sure, but also a ton of potential for good.
I'm right there with you. It's tech, it's finance, it's social impact. The next few years are going to be wild.
For sure. And to everyone listening, keep learning, keep asking those questions. This is a conversation that needs all of us. Until next time.